Now, there's a number here, right? There's a 2566 and then 2570. So we can already do basic math, right, and see what the difference is between 2566 and 2570, right? That's 4 pips. You guys can't see it. You may not be able to see it, but this is 4.0, right? That's the spread, and there it is. I'm gonna leave my mouse so you guys can see. It says spread. That's the difference between the bid and the ask. Okay, so if I go with Jenny, if I say, hey, listen, you got a dress, right, that you want to sell, right, and I want to buy it, okay, but you want to sell it at $100, but I want to buy it at $95. All right, that's a $5 difference, right? That is a spread. The $95 is how much I'm willing to pay for it. The $100 is how much you're willing to sell for it. So guys, I know when you guys get into Forex, you eventually learn about the spread, or you hear about the spread. You may not necessarily learn about it, but you hear about the spread. Be careful of the spread. Make sure you're not in a trade with a high spread, or make sure you're in a trade with a low spread. This is what the spread is all about. The difference between what somebody is willing to buy something for and what the seller is willing to sell that same thing for, right? That's what the spread is. Okay, so now I want to buy that $95. You want to sell it at $100. Now, could I buy it if you're selling it at $100 for $95? No, I can't buy it for $95 because I have to purchase it at $100. You're like, yeah, Bain, no, I put too much work into this dress. No, this is handcrafted. You know what I'm saying? This is a special limited edition. Woo, woo, right? And I'm just like, okay, I understand. Yeah, I probably should pay you $100 for that. But I was just trying to bargain. I was just trying to see if I could get it for $95, right? Because it'll be better for me, right? I get to save $5. Well, you're the seller, right? You make the determination on what this is going to cost. So if you say, you know what, yeah, man, it's okay, I'll take $95 for it, right? It's pretty close to the amount that I wanted to get, and it's not too far off where I feel like I'm losing a lot of money, right? So then you'll sell it to me, right? Now it dives, this is a deeper conversation and a deeper subject for another time when we go over like things like options and all kind of other stuff where there's some kind of spread and you want to get in at a certain price, but your order, like you place an order, right? So I place my order for $95, but nobody wants to sell that dress to me at $95. But eventually, like maybe the value of your dress goes down for whatever reason, right? There's some factor that makes your dress go down, right? If you're a company, right, and you make these dresses, well, maybe your company has had a scandal. Maybe your company has gypped people of their money. Something happened, right? So now your stock is going down. So the value of your dress has gone down. So it used to be at 100, but now it's at 95. Oh, guess what? My order gets filled because that's how much I was willing to pay for it, was 95. And again, this is a whole nother, little thing, but I just wanted to point that out so that you guys can understand what the spread is between the bid and the ask, the buy-in and the sell price on Forex pairs. All right. Something important to pay attention to, but you don't have to pay attention to it too much because normally if you trade the major pairs, every pair that has the US dollar in it, the spread is usually low, right? This is pretty high. Like a four point spread is starting to get up there, right? And the way you guys have to think about that is like this: if you get in at $2 and if you get in at 25.70, right, you're automatically down 4 pips. Okay, so we can just go ahead and subtract 4 pips from this, right? So that's 7. My bad. If I'm subtracting this is 6. Let me erase this. And again, I talk about this in one of my other videos where I talk about the spread and why you want to be careful of what the spread is, right? We want a low spread, right? We want almost no difference. So if we had a low spread of 1, right, then that would be Janny, she's selling me the dress for $99, even though she wanted to sell it for $100. Come on now. A lot of us ain't gonna really complain about that, right? You understand what I'm saying? Like she'd be like, okay, close enough, right? You know what I'm saying? And she'll sell it to me for $99, right? Because she's getting almost 99.999% of what she actually wanted to sell it for, right? But again, she's if the spread is any higher than that, she's like, come on, Bain, like, nah, you got to pay me $100. Like that's ridiculous. You want to give me $80 for this $100 dress? You tripping? All right, that's what that is. So, and you don't want to be. And if she was to sell me that dress for $80, then she's automatically losing $20. Okay, that's an automatic loss. So for her to have to make up that extra $20, she got to go and do something else. She got to make another dress. She got to sell something else, whatever the case may be. But she's behind the 8 ball, and nobody wants to be behind the 8 ball in regards to trading or getting into a trade. You don't want to be behind the 8 ball the moment you get into the trade. Meaning, if there's a high spread, you don't want to get in this trade and then you automatically see that you're in red and you're down 4 pips. You're like, what the hell? I just got in this trade. How the hell am I already down? Right? Everything looked perfect. It looked like it was going to go up. So how the hell am I down on this trade? Well, because the spread was super high. So this is the commission fee that is going to the broker. So you guys asked about that, the commission, right? So this is the commission fee that you're paying to your broker on this particular pair. If you're making a trade on the United States versus the Canadian dollar, right? You're automatically going to give them 4 pips of whatever your lot size is. Let's say if you took out a standard lot, you're making $10 per pip. So you're already down $40 when you get into the trade. That's crazy. Right. So this is why we pay attention to the spread. We want it to be as low as possible so that we don't take a major loss. Right. And then to make money, it doesn't take us a long time to cover our losses to the point where we're finally in profit. So if you wanted to make 8 pips, right, well, now you got to make 12 pips just to make 8 pips because you were down 4 pips out the gate. All right. I hope that makes sense to you guys. If it doesn't, please let me know. I'll kind of go a little bit more into it. Or again, just review the video. Right. That's what that's all about. So I'm kind of going a little left, dipping into the spread. But again, it's a part of the pips that you guys need to know about, so that when you're getting into a trade, you just kind of eyeball it real quick. You say, okay, I'm about to get into this. Everything looks nice. I see the setup. Bain taught me my support and resistance. Boom, 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 boom. I'm ready to rock and roll. I'm ready to pull the trigger. Let me take a look at the spread real quick. Oh shit, the spread is at 10. Oh hell no, I ain't taking this trade. Nope, 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 nope. I'm gonna wait till that trade, till that spread gets down to 2 or 1 pips. All right, it's gonna hip you. All right, it's gonna help you avoid your losses. You understand me? You will absolutely start realizing how you manage your losses, which is risk management. How do you manage not taking a major L? In real life, you guys do this. You guys do risk management in real life. Y'all know how it is. Hey girl, come meet me at the club. We all going out. We finna go to the club. Where the club at? Oh, the club is way, over here. You're gonna be like, wait, that club is like 30 miles away. Girl, yeah, but it's jumping tonight. You need to get there. You 30 miles away from the club. You asking yourself, is it worth it? Do I have enough gas? Do I feel like driving that far? If you're gonna go to the club, you're gonna be intoxicated, right? At some point, maybe not right away, but at the end of the night, you're gonna be a little buzzed, right? Now you gotta drive 30 miles back. Come on now. I know we got Uber and all that, but these are the things that you're thinking about as you're, as you deal with real life stuff. Like there's a whole bunch of scenarios that I'm sure any one of y'all could throw out there on how you are managing not taking a loss, okay? Not taking an L, all right? You do this on a normal day basis, right? Hey, should I go this way? Should I go that way? Boom, 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 whatever, right? Is this a better opportunity for me? Is this easier on me? And is this something where I'm not going to be feeling like, damn, why did I do this when I knew I shouldn't have did it, right? Some of y'all might see that spread is 10 pips, and y'all like, I don't care, I want to make some money. Y'all hop in the trade, y'all automatically down $1,000. Y'all don't know why. Maybe the trade goes in your favor, right? Now it goes in your favor 10 pips. So you've made $1,000, but guess what? You were down $1,000. So now you just broke even. And nothing sucks more than knowing that you made money, but you just ended up breaking even. Oh my God, you're gonna pull your hair out. All right? You're gonna smash the computer, you're gonna toss it out the window, you're gonna feel some type of way, and you just don't say, fuck this Forex stuff. Forget about it. Nah, this ain't for me. Nope. But it wasn't Forex. It was you deciding that you were okay with being behind the 8-ball, right? Because remember, you won your pips, you won your money, but because you were so greedy, you only were thinking about money. You weren't thinking about how to manage your risk, manage your losses. You ended up losing. All right, that's what that's about. All right, so again, people just kind of be aware of that, right? Make sure you look at the spread and know that the lower the spread, the better. The higher the spread, just stay away. All right, nobody's going to commend you for being brave and getting into a trade with a high spread. It don't work like that. All right, I'm definitely not going to say, oh, Juju, great job. You hopped into that trade with a large spread. Good, yay for you. No, hell no. I'm gonna be like, Juju, what the hell was you thinking? What was you thinking?
I can testify to that. You speaking big facts there, because I've blown quite a few thousands doing that.
Oh my God, man. I felt that one, man. In my chest. All right. Yeah, nobody wants that feeling, man. All right. And I'm here to save y'all from doing that. I'm here to keep y'all informed about like what to look at. Like why did I take that L? Right? Well, why did it get so hard? Welcome back, Chanel. It's all good. It's all good. You're in the mix now. So you ain't missed much. So you're good. But yeah, Juju, man, this is what this is what it's about, all right? Minimizing risk, knowing what you need to know, some simple ass stuff, right? Supply and demand, that is basic, but some concepts, right? Just putting 2 to 2 together. A lot of times I don't want to get too graphic and all that, in the meetings, but I want to kind of like relate it to sex, right? You know what I'm saying? With boys and girls, we all know when you into somebody, right? Or somebody's into you, right? There's a whole amount of steps that happen, right? Y'all having good conversation, y'all laughing, y'all smiling, everything is flowing, right? Then next thing you know, right, you get to the next stage, right? So we talking bases, okay? First base, second base, third base, home run, right? First base, a little touchy, right? Second base, maybe a little kissy. Third base, the clothes coming off. Fourth base, you already know, y'all swinging from the center fans and doing God knows what, right? You understand what I'm saying? But it's steps to it, right? You know what I'm saying? For the boy and the girl, when this girl is interested in you, and when the guy is interested in you, right? But there's certain things that are taking place that gives you that confirmation that you're about to hit a home run. That's what Forex is like. There's certain things that line up, right? Where you're looking on this chart and you're saying, oh man, price is at my support zone. Okay, I'm at first base. All right, price gave me this bullish engulfing candle. Okay, I'm at second base. All right, you know what I'm saying? Oh, the news also, there's some positive information about some economic news that came out and the expectations were greater than, what was expected. Oh man, I'm at third base, right? And now you place the trade at a particular time of day where the markets are open and moving and all that. Guess what? You just hit a home run and you about to make your money. All right. So people, please rock with me. Listen to me. Hear me out. Take your notes. Keep coming back, and you'll see, man. In no time, y'all gonna be making some good money. All right. Pips. Here we go. We finally get to it.